Good morning, traders. It is 8:02 a.m. Chicago time on Tuesday, the 24th of January, 2023. This is episode number 2398. 98. We're almost at 2,400 episodes of the Trader Bite. Thanks for being a part of it. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So we're going to dive right into the conversion trading pre-market summary sheet. Overall, starting again, mixed sentiment. We're seeing a NASDAQ come off a fair amount. The NASDAQ being led down by Google, Apple, Tesla, and Meta. Those are the big ones that are pulling it down. Apple's down 1%, Google down 1.63%, Tesla 1.69%, and Meta 1.39%, Amazon 0.76%. But across the board, we are mixed to slightly risk off today. The S&P just took a nice little drop back to the 4013, which is a level we talked about quite a bit yesterday. We're revisiting from the top. Earnings in focus. We had a lot today. We had Verizon, which was in line. Johnson & Johnson beat by 5%. General Electric beat by almost 10%. That was outstanding. Lockheed Martin beating by 5%, Raytheon beating by 2.5%, or is good. And travelers companies misses on earnings, beats on revenue, misses by 15% on earnings, beats by revenue by 11%. So there's some sort of inefficiency there. And then we have 3M. 3M missed by 3%. And that's what's on deck. What the key releases after the close today: Microsoft and Capital One. Microsoft is gigantic. Microsoft expected revenue of $52.97 billion for the quarter. So the market will be paying attention to that. So that's it for the earnings. Higher European PMIs firm up expectations of 50 basis point hike. Lagarde's been indicating that traders on the short end of the yield curve are likely to get smoked. So the expectations for 50 bips. UK PMI is lower. Swatch sees strong China consumer rebound. 3M to cut 2,500 jobs. Another company cutting jobs. Also, I read this morning on my ride in, read the Wall Street Journal talking about temp workers starting to get cut quite a bit. Musk's set to take stand against again in trial over Tesla funding tweet. The Department of Justice poised to sue Google over digital advertising dominance, and that's why we see this quick drop in Google this morning. So this is where we stand. Looking at the rest of the session, really pretty simple calendar. There's not much to go over here that's significant, so I won't spend time on it. Looking at the S&P, and I want to remind you again, the rotations. The rotations are what you should be paying attention to in this gray area here. The rotations for those products tell you what a reasonable quantitative stop should be based on. It doesn't mean that you should have a stop 6.5 points in the ES, but it should tell you something about how volatility's dropped. Remember, these were in the 15, 16 range, even in the 20s at some point. Now it's 6.5. The S&P, just statistically speaking, we've traded 161,000 contracts. We are trending down. We have a multi-distribution profile. 72% of the inventory short. This means that 72% of the volume that has occurred in the overnight session, 72% of the 161 occurred below the prior settlement. So the inventory short range 28.5 points, pretty much in line of what we've seen recently. Point of control slightly higher, 40.25 this morning after yesterday's big rally. So that's it. Let's take a look at the charts. So what are we looking at here? The S&P, nice finish on Friday. If you recall, we talked about this yesterday. We talked about looking for any tests of the week structure from Friday, week structure being the single prints below, any tests to look for a pop. What was our target yesterday for scenario one? Our primary target to get risk off yesterday was what? Do you remember? There were two targets up above that I talked about, and they were, I'll tell you what they are once you've answered. What we did yesterday is we took out the swing high, last week's weekly high, and we have pushed ourselves well into the 4,000s. Well into the 4,000s this morning. We are slightly weak. The market really did a great job pushing higher. However, it had a pretty deep pullback. Yesterday we had a pullback that pushed through the mid of the rally, which was not expected on a trend day up. I expected the point of control to finish at the top of the range for the market to kind of flag, to put in a high flag and hold high. So the profile that you see in front of you here is a short covering profile. It opened at the low, finished at the high, balanced, but it started to exhibit some weakness into the close yesterday. Although Delta was very strong, there was some late buying, late lifting in the S&P. We'll look at that in a minute. But the targets yesterday that I talked about were 13.5, or 13 really, 30, and 50. Really, the key targets yesterday were 13 and 50. The high was 56-ish, I think 56.75 or so. We saw a massive fight at 50. In fact, we still have a ledge there at 50. And then it just came off and kind of closed a little bit below that. The market ended up settling yesterday on top of the point of control. And here's what it looked like in the price action. See this nice little push higher, really beautiful push. Managed to see the impulse, managed to get the first setup at 4005. Campaign was looking for 004, but it ended up yielding 4.25 yesterday to campaign, and it pushed into the 13 relatively quickly right in here. And then from there, the pullbacks were pretty tight. There was a lot of structure to trade against yesterday. As soon as it broke an impulse high, you just had to buy a pullback. This is kind of a typical trend day approach. But look at what's happened here. This is a pretty big move down from the 56.75 high yesterday, all the way through and through the RTH mid. It bounced off of the full session mid and kind of closed in between. This is not what you would expect on a trend day up with a strong close. This is a trend day up still, but we pretty much came back into the IB. We almost closed inside of the IB. If you look at the relative delta yesterday, just to examine what's going on, the relative delta, pretty strong in the morning on the rally right here. And then it really petered out. So if you're looking at a higher time frame, if you're looking at a 15-minute chart or so, this is a single impulse. We get a pullback, okay, almost to that 40-30. And then we get the continuation trade, and this looks corrective to me. And what you can see here in the delta is that The delta was there in the morning. It petered out in the afternoon, okay, as we made a higher high. This is expected because there aren't as many participants and aggressors in the middle of the day as we see at the beginning of the day and at the end of the day. So all of you know that if you looked at volume, so this is a 30-minute volume chart. Let's switch it to something a little tighter. Let's do a 1 minute. If you look at a volume chart on a typical day, you're going to see the this kind of smile pattern, this smile all the time. So you're going to see this repeat all the time. It just well, started here, right? So there's this smile pattern. So there's a lot that goes on at the beginning of the day, and then there's a lot that goes on at the end of the day, with a lull right around the Chicago time lunch period. And this is kind of a normal pattern. So from day to day to day, we get this kind of wave. So you can't look at the delta at the beginning of the day and at the end of the day and do this kind of direct comparison and say, oh, there's delta divergence in the middle of the day. But the middle of the day is not really comparable to the open and the close where positions are being adjusted. But what we did is we spent most of the session here at the zero line when it came to delta. So at this point, once we made the high, what this is saying is the aggressors on the move up on a trend up day, the aggressors on the buy side were offset by aggressors on the short side. And so that's why the delta moves towards zero, which is very unusual on a trend day. On a trend day, delta is kind of staying positive. And then what we did is on the close, we came in and we rallied just a tad on the closing range trade. So from about 2:30 Chicago time till about 3 or whatever, 3:30 to 4 New York time. There was some real big buying. So we saw this strong delta. Coming into today, however, you could see that there was really not much participation in terms of price. So here's settlement, okay? We open back up right on top of settlement, as we often do during the week. And then price dips below, so does delta. Price pushes above, so does delta. Price dips below, delta stays positive. And then price makes this spike high into 41.50 and starts to trend down. Delta is relatively sideways until this move right here on this news, this push down to 40.13 shows us pretty decent participation. But overall, expecting what this is saying is there was a lot of buying into the close. Price did not make it back to the high of the close. So there's a lot of people are being positioned long into the close, it seems. We don't know for sure. And then since then, the market has just gone kind of skewy to the downside with delta being flat. So price is moving down, and the aggressors are neither buying nor selling. It didn't matter that we opened. Here's the European Open. Not much happened there. Usually we see a spike in delta or something. Nothing going on here today. The expectation today, however, the way the entire conversation here that I'm spending about 10 minutes on is to say today is likely to open up in pretty good chop. Again, there's negative news on Google, job cuts at 3M, some missed earnings, and so on. There isn't a huge news event that I was able to detect in the morning. Nothing really big. But we did have a few earnings, and now the market is just kind of down here in that 40.13 area and holding sideways. To me, this looks like we are likely to advertise prices lower. We are likely to squeeze yesterday's buyers, of which there were plenty. Remember, I went into this long explanation to say, wow, look at that close. It was a kind of a reasonably weak close for a trend day in terms of price, very strong in terms of delta. Small lots dominated the buying. The little dashed orange lines is small lots. That's 1 lots to 9 lots. These guys are very likely to get squeezed today as we pull back towards the 40.13, which we already accomplished, unfortunately, before the open. My initial trade before the open was to look for a test of settlement, failure to hold settlement, and then I expected squeezing these guys that came in late yesterday for a run to 40.13, our level from yesterday, and then from there we are likely to push to 4,000. If we clear 4,000, we're back at 39.92. So we're taking back yesterday's push up, and we end up with this kind of spike configuration. I know that's kind of a lengthy explanation, but it's not. I don't want to sit here and give, for those who've been following the Trader Bite for 2,400 episodes, know that I'm not here to say, here's my plan, these are my trades for the day. I'm here to talk about the reasoning behind it, because I know that I'm going to be wrong reasonably often. And it's kind of like being in math class or being a math major, but always using your calculator. You can get the answer, sure, but you won't understand the math. You won't understand why we use calculus, what a first and second derivative is, and so on and so forth. I'm here to explain how we got to the result, because you need to be able to check that work, and I'd like you to be able to disagree with me with my reasoning. So what I'm going to wait for today, so here's the 40.13 half. Again, people, we just pulled back to it. We are stuck to it. So we are back at this balance point. I am not going to integrate Friday or yesterday into this profile, because I want to see if we start to loop back. Once we start to loop back and finish the day down here, then both of these days are going to sucked into this profile, so we can see what the new shape looks like and where resistance in terms of volume probably is. So today, our first trade of the day, well, the condition we're opening in today, we have a trend profile in the overnight session. We have Delta sitting sideways. We have probably a lot of weak hands this morning, weak longs this morning. We'll see how they bounce. Inventory short, that's another factor. And then we're opening in range of yesterday with the point of control and settlement above us. So the first trade of the day is, come on, you know what it is. First trade of the day is to see, since we are against balance here, which is why we're expecting us to be choppy, is to see if we can test, find buyers, and get an aggressive push up. On an aggressive push up, the pullback, we're going to check the pullback, see if the order flow supports along for a gap to settle trade. Gap to settle, internal gap to settle trade, looking for 40.36 or so, right? So that's the first trade of the day. If it gets to 40.36.50 and it holds bid, and it's just kind of holding on to those prices, and they keep buying them and buying them, then we're looking for it to push through, pull back into that 40.35, 40.36 for another attempt at 40.50 and potentially 56.75. That's the bullish view. If it's not able to get up there in the morning and then we get an impulse down, we're looking to sell pullbacks into the 13 against the overnight low, and then we're looking for a continuation, and this gives us a tremendous opportunity in range all the way down to 39.92, and then we start to attack these weak structures below that all the way down to 39.60. Okay, so that's the alternative. If it gets to the prior settlement and then it's not able to push through and it comes back, puts in a lower high, and it starts to roll over, then we're looking to hit the bid on a breakout trade short for those same targets, 4,000, 92, 80, and 60 down below, back into this weak structure. And then we still have this naked point of control at 39.51, and that would be the key target. So we've gone from 50 to 50, mid-century to mid-century. That's all I have the time for today. I was going to cover the NASDAQ, but the NASDAQ led yesterday pretty well. NASDAQ has the same structure. NASDAQ, however, is in a different position because the NASDAQ has that 800 below it. The NASDAQ has the point of control right underneath it. So the stall out in the NASDAQ makes sense. We're in this heavy participation area. The NASDAQ's kind of held by this the gravity of this big micro composite. The NASDAQ's relatively stronger. It led us up yesterday, and it may lead us down today, but the NASDAQ is showing relatively more strength than the S&P. Crude was fantastic yesterday in the way it operated. Crude missed the prior week's high. Crude missed the prior week's high by 2 ticks. Then it started to sell off. So it missed the prior week's high by 2 ticks. So we have a lower high, and then it rotated down and it went and tested the Friday point of control, Friday settlement, which is last week's settlement, and then it closed within 2 ticks of the point of control and settlement. So I talked about this in the Convergent Mavens channel as I was posting my homework, and I talked about how precise this product is. Even though it's a fundamental physically delivered product, it is quite precise. I expect crude to roll. It really did a poor job testing that prior high, and it had 2 ticks to cover, and it couldn't do it. So I think we've run out of buyers, most likely for crude, and the next likely target is right here at the 80-20 kind of zone. That brings us back to the point of control. If we look at the crude composite, you can see that crude has had a few areas that it's got some acceptance. So we've got 81, 80-20 is the LVN and the most likely target over the next session or so, and then beneath there at 79. That's where crude is currently. It's really still in this range right here. After today, crude is going to, the 2 days will be accumulated into this composite. I know the trader bites are getting long. We're covering 3 products instead of 1, but hopefully you can check your plan and trade with confidence today. That's the goal. Good luck. Oh, one thing I want to announce, very important. Tomorrow at 11 o'clock, the deadline comes in for you to join the giveaway for the Futures Radio Show. We're having a trader from SMB come on and talk about trading consistently. This is a successful trader who's been trading a while, and he's going to share his tips for how he maintains consistency. We're giving away 3 Kindles. EdgeClear is giving away 3 Kindles with 2 trading books each. You can sign up for that at edgeclear.com/Delhi. edgeclear.com/Delhi. The show starts at 12 p.m. Again, the deadline for signing up, 11 a.m. tomorrow, Wednesday, the 25th of January. Good luck, and I'll catch you tomorrow. Take care.